Ladies and gentlemen, another asset capitalist show. And this week I am not in St. Bart's. I'm somewhere else. I'm in transit. Airport, glass, bad coffee, the soft hum of people going nowhere fast. And yet that tape never stops. Talks broke down, the weekend, Iran, the United States, the whole theatre cracking open again. And the market on Monday, the S&P, it did what it always does. It did something else. And so we go again. Not to explain it cleanly, not to pretend there's a neat answer waiting, but to step inside it. To ask what the hell is actually going on, what matters, and what doesn't. Where, really, this is all about where the opportunity. Does it quietly sit whilst everyone else is looking the other way? I think it does. But please, before I leap into this, remember, this is not advice. God forbid they'd lock me up for that. Rather, it's the lyrical imagination, my lyrical imagination, running at full tilt through a system that really makes sense until, of course, after the fact. But remember, to my asset capitalists, if you feel it, you're already in it. So let's put a name to this. I'm going to call it the game beneath the noise. You see, there's a particular kind of man, me, who can't really help himself. He knows better. He knows he shouldn't look, and yet he does. What am I talking about? I'm talking about the last YouTube comments. And I do it not out of insecurity or vanity. Okay, maybe the latter, a little. But he looks primarily out of curiosity, because data is data, even when it comes wrapped in bile and nonsense. And what the man sees again and again is confusion, not about price, but about structure. People, good people who work damn hard, they don't understand. Most of the time, they don't understand what they're actually doing in stock markets, because they confuse a trade with a position, a reaction with conviction. They think they're in the market when they're not. They're just passing through it. Because look at what just came to pass. The weekend breaks. The peace talks fail. The Iran super oil price shock, supercalifragilisticexpialidocious. The oil price shock story, you know that one, oil at $100. It shifts back to risk. Monday opens and the S&P is lower. Of course it fucking is lower. That's what it's supposed to be. But then, of course, it gets bought. Oh my God, if I sat there being short and seen a market rallying, not nervously, not reluctantly, but cleanly. And Tuesday's the day when I'm recording this, higher again, ignoring everything you were told should matter in these instances. That's not noise. That's instruction. That's price telling you what price is willing to ignore, what you should be willing to ignore. And that's the only filter that counts. You see, real operators, the macro guys, the hedge fund managers, they understand this. They don't chase headlines. They build systems. Not a bet, not a tip, but a structure. Equities, bonds, alternatives, cash. When I say alternatives, people, I mean gold, Bitcoin. I mean index-linked treasury securities. I mean property. Cash, I mean dollar cash with, 3.5, almost 4% yield. I'm describing four corners, the macro compass, always shifting, never still, and it's done. The compass is composed not because diversification sounds clever. I mean, if anything, it's passé, but because reality doesn't move in one direction. Rather, it moves in layers.
And the serious operators, they're all positioned strategically in these four quadrants. Not fully, I said strategically. Not blindly, I said strategically. But with presence, adjusting, leaning, reallocating. Because success isn't a hit. Rather, it's a process. And once you see that, everything else simplifies. And you stop chasing noise. You start looking for, I'm going to call it like anchors, something to anchor your mind. The real ones, the S&P, the NASDAQ, one quadrant. Long duration US Treasury bonds, another quadrant. Gold, Bitcoin, the alternative quadrant. Cash. These are not just assets. These are expressions of growth, of fear, of liquidity, of belief. The entire regime speaking to you through price. And when those expressions, when they stretch too far, when they go too high or too low, when they drift away from themselves, promise me, you don't argue, you don't predict, you listen. Because that's when the system starts whispering, mean reversion. And you stop chasing ideas and you start locating extremes, real ones, the kind that don't forgive quickly. Take bonds, US Treasuries, the 10-year. Years of damage, slow, grinding, undeniably weak performance. The Treasuries are not a trade. They're a condition. You buy them not because they feel good, they certainly do not. You buy them because that's where the asymmetry in the financial universe lives. Some of the asymmetry, not the sexiest, but in terms of the macro, this is like one of the great foundations. And it's very rare that the foundation stones of macro offer you the asymmetry, which seems to lurk deep within the Treasuries. Remember, you're not there for excitement. You're there because that's where time lives, because duration is memory, because somewhere beneath the noise, beneath the equities and the stories and the sudden enthusiasm, there's a slower current that records what has been endured. They're the long breath of the system. And right now they sit almost deceptively calm or becalmed. Yields back near their long-term average since the 1960s. Time measured in decades, as if nothing extraordinary happened. And yet, the price tells a different story. A near 50% drawdown, 5 years of torment and misery, a slow grinding compression that's already absorbed the shock that the others are still talking about. And that's what dislocation looks like. Not noise, but damage. The damage done by the compass when it falls. When the macro assets take that kind of damage, when they've been on the canvas, on the boxing canvas, when they've been knocked out for that long, come on, the crowd, you know the crowd, the impatient as ever, the crowd, they stop looking. But your system, it doesn't debate it. It allocates, not all at once, heaven forbid, not heroically, but inevitably, because the cardinal points of the macro world, they don't fail. They may stretch, they may distort, they may forget themselves for a while, sometimes violently, sometimes cleanly, sometimes not at all the way you imagined, but they come back. The compass holds. It always does. So you place something in the quadrant, not because it's moving, but because it moved past tense, because it already carried the weight that others still pretend isn't there. You buy not to win quickly, but to endure, to anchor yourself to the one place in the financial system that remembers what Marcus spent every day trying to forget. But that's only one game. The other is conviction. And conviction has a name today. Oracle. not a macro asset, but a stock decision. You see, this is where our imagination shifts, because now you're not looking at a macro asset. You're looking at a single stock decision in the topsy-turvy world of idiosyncratic equity risk. And risk there's a lot of. But I'm going to say Larry Ellison is not a variable. He's not a ticker. He's a man. He's connected. He's informed, with access to things you and I don't have, and the type of conviction most people can't possibly hold. And Larry's made a choice. Larry is leaning in to AI. Larry is betting his ranch, not cautiously, not incrementally, but fully. And that matters, because this isn't mean reversion. This, my friends, this is intent. This is capital deployed ahead of certainty. This is a wager on what the world is becoming before it has even agreed on it. But again, that's only half of the picture, because while that conviction is building, the stock price has already fallen hard. A drawdown of scale, a 2/3 collapse. That's not noise. That is painful. That is damage. That's the kind of thing that clears out belief. The belief system is empty, and that leaves the asset sitting there, unloved, misunderstood, discounted. And that's where it gets interesting for the assets, because now you've got both. You've got conviction on one side and dislocation on the other. Conviction, dislocation. And when those two forces, they rarely meet at the same time. But when they do, oh my God, when they do, you get something else entirely. You get double voltage. Not just a recovery, not just a story, a compression of two different energies moving together, like atoms pushing together. The mathematics of this drawdown pulling price back towards itself, and the will of the operator pushing it forward into something new, a brave new world. And that's when things stop behaving in straight lines. That's when moves accelerate faster than people expect, because the market isn't just repricing what was lost. No, it's trying to price what's being built. And most people, they can't hold both ideas at the same time. And so they miss it. They wait for one to confirm the other. But by then, that's too late. The move's already well underway. So the edge is not choosing between dislocation or conviction. The edge rests in recognizing that rare moment when both are firing simultaneously. And then something else appears, something the market doesn't quite understand. I'm taking you from 10-year treasuries through Larry Ellison's betting the ranch on Oracle, and we're looking at Bitcoin. But actually we're dipping deeper into the crypto universe, because I want to talk to you about Ethereum, not just a price, a system. My system. And it takes us now to BitMine, the Tom Lee vehicle. I want to say it's not just holding the ether, but it's running it, it's staking it, it's building infrastructure that keeps the network alive, and it's getting paid for it. Inside the system itself, a yield that compounds quietly. That's not narrative. There's no attention. That is simply accumulation. And the market, if the market even bothers to look at it, it shrugs. The price is 20% below the sum of the parts. It's at a 10% discount to the asset value. And remember, if the asset is Ethereum, and Ethereum is down hard, it's like down 55% from its highs. So you've got the equity trading below the value of its holdings, and the holdings have fallen 55%. You've got two layers of compression. Oh my God, are we talking about double voltage again? A discounted vehicle wrapped around a discounted asset. I love it. Two layers of compression, both of which can expand. If one resolves, you get paid. But oh my God, if both resolve, things tend to move a lot faster and a lot higher than anyone would give it credit for. And I've seen this. You've seen this with your very own eyes. We've seen it before. Grayscale, the closed-end fund owning Bitcoin. They traded like this when Bitcoin was bleeding out in the last cycle. When Bitcoin got to 15,000, the Grayscale Trust was sitting at a 45% discount. Its holdings of Bobby Digital, way more than it was worth on paper. And yet the market just refused to close the gap until it did, until sentiment eventually turned. But by then the move was substantially underway and the easy part had been removed from the equation. So that's why we're talking, ladies and gentlemen, brothers and sisters, fellow asset capitalists. We're searching for the moment. It's not loud. It's never loud. I'm talking about a slight misalignment, a price leading one way, reality the other, and something in between that refuses to reconcile the two. A hesitation in the pattern, a small fracture in the agreement. Everyone else is still pretending that it holds. You don't get too many of these opportunities. They pass very quickly. Or they linger just long enough for the impatient to look away. Because the instinct is always the same. It's only the expression that changes. Sometimes it's damage you're buying, damaged property, the glitch, a long unwinding that's already done, the past sitting there, heavy, waiting to be carried forward again on the shoulders of men. Sometimes it's a will, a man, Larry, leaning into the future, leaning before it has taken shape, before it has permission. And sometimes it's something else entirely, a thing without a category, a thing that's not yet spoken properly of, not yet placed inside the neat compartments that people need in order to believe. These are the ones that don't fit, because the language of the financial universe hasn't caught up yet. And so they're cast aside, they're half seen, misnamed, discounted into obscurity, until the weight of them becomes undeniably attractive. And there's a satisfaction in recognizing these early. It's not triumph. It's something quieter. It's a kind of internal alignment. What you see and what is. They stop arguing with each other. That's why I call it a quiet moment. Facts properly held together. Energy not wasted, not dissipated. No need to drag the world into agreement. It comes or it doesn't. Call it discipline, call it perspective, call it the discipline of dislocation. It works the same way either way. My friends, my family, a short one. I do hope you're enjoying these. Thank you so much for your time. The source code is taken from my Substack, which is mirrored with my Patreon, and it would please me immensely if you considered subscribing. Or if you're listening on the podcast. I don't think we've had a review in like 2 years. Partly that's my fault because I'm either doing it or I'm not doing it. Apologies. Putting things out. You may be watching this on YouTube. Hey, my brother's on YouTube. And I see all those comments. Some of you guys are vicious, but thank you. I appreciate it. Yeah, the drugs don't work. I think next week's show is going to be the drugs do work. That's a finger to everyone not everyone, but to some of those people on YouTube. But subscribe to the YouTube channel. I hope you subscribe to the podcast. It costs you some money. But I think it's like $300 a year, and you get the Substack. You get me almost every day. You get inside my mad. But anyway, over and out. I normally say bisous. Bisous is like French for kisses. But my kisses, my hugs, my gratitude, my thanks to all of you who bothered to tune in. Until next week.